What's going on, guys? My name is Andrew. I got this biggest stein in the world because I got the biggest opinions out here. If you guys were on Trey's Trades, Gorilla Game, welcome. We just got a whole bunch of new members. If you have not yet, smash that subscribe button to join the Meatball Army and join Miss Professor Meatball as well as myself. I would really appreciate that, as well as smashing that bell button too. And I'll tell you why, because today we have important counter DD to our friend of the show and man who decided to do his 1, 2, and 3rd and final interview live stream on my channel over the weekend. HeyItsPixeL and Josh, his DD is being called into question by a user called Ancrid Stone 19 hours ago. And we are going to cover it. We're going to cover exactly what is up, and I think the only thing you need to do is strap in, hit that like button, and be ready to have some critical lenses to the Endgame DD that Josh had defended on the channel and answered your questions so patiently before. Give a thumbs up for Josh, and right as we go along, let us read this with a critical eye. So, Ancrid Stone says, I believe that the DD leading to March 19th is fatally flawed, and he will explain with references to his sources. The DD that he was referring to is posted by Josh, HeyItsPixeL. Please let me be clear. This post is not meant to shout anyone down, but is rather to develop the conversation. With over 6,100 comments on the main post, he felt it warranted a post on its own so that it could be heard. Before he gets to the important stuff, he would like to start off with the really important stuff. Okay? Excellent sentence already. Hey, to Josh and all the mods of the sub, as well as anyone posting DD, they believe that we owe you our gratitude for putting in the effort to develop our understanding. Right or wrong, you are doing your best for the cause. Okay. If you are more interested in what I have to say than why I'm saying it, then please scroll down to the important stuff. For my 2 cents, I think it was right to publish the DD. Okay, so he is not saying that Josh was wrong to publish that DD. There are many people whose DD is being deleted from other subs. RGME is the only place where it appears that DD isn't being deleted, and even stuff that appears to be totally bogus is being allowed to remain, so it cannot be discussed and called out. He applauds the mods for the courage to allow this level of free speech in this entire sub. The only suggestion of DD that I have seen is in response to the anticipation of the DD and predicting the date of the squeeze. I think that was an overhyped nature of this post. I've never even seen a trailer for a DD post, and an instinctive knee-jerk reaction. I have not seen a single comment on any DD post saying that DD shouldn't have been posted because it helps the other side know what we know. Yes, it gives them a chance to readjust their tactics, but they can do that whether we know what they are up to or not. So I don't think that is a major concern. Knowledge is power. Remember, data is king, and we demonstrate the extent of our knowledge, then we are showing our power. And this is the most important part of, if you guys are following the live stream, I mentioned exactly what I did not like about Josh revealing the date, giving us the playbook so that we understand, but also putting us, one, in a sense of false hope about expectations of how it's going to play out in the next few weeks, and 2, giving the playbook straight away to the bad guys, the hedge funds, the institutions, the hedgies, the hedgehogs. I can't post this on RGME because I don't have the minimum requirements. This is the only form of censorship that he can see taking place, not of me personally, but of new accounts on this sub, and they fully understand the reasons so that they can protect the sub from bots and shills using new accounts. Whether you have posted in favor or against a prediction of the date of the squeeze, I think you are providing an invaluable contribution because it keeps this sub from being an echo chamber of positive sentiment. Just as in academia, all research is peer-reviewed, they think it's only right that DD should be too. A critical friend is sometimes the best friend to have because they can help you see the error of your ways. Please consider Ancrid Stone a critical friend. So now, the important stuff. So I guess all of the really important stuff was just, hey, covering my butt. This is stuff that I want to know, that I'm not against Josh, I'm just against some of the things that he said. And now that we have objective peer review lenses on, let's see what this critical friend has to say. This is worded as a response to the original post from Josh. The analysis isn't tightly connected to the conclusions. Most of the analysis is an assumption as to what transpired and barely features in the end game. Now, one of the things you might notice is that Josh said his last live stream for a long time is yesterday. So that already happened. So there's no way for him to respond to these allegations. So that's something to keep in mind. They think that Your theory is very similar to the interstellar yo-yo theory, only that theory explains how the shorts get out of their position at crunch time on a cyclical basis, whereas yours assumes that they have got themselves stuck. Your post also reads as though both sides are engaging in massive amounts of market manipulation. They may be, but to suggest that people long on GME are involved in market manipulation is just an invitation for the SEC to step in and put an end to the mother of all short squeezes before it even happens. Cramer is apparently already talking about how we should all be paid $200 per share and be done with it. Can't remember the link, but it's not important enough to find. Let's not give fuel to that argument. I believe there are following factual errors and omissions in the analysis. They believe that most, if not all, people on this sub and others holding GME are doing so because they believe the stock can only go up in price. We are not buying in droves to manipulate the price upwards. We just buy what we can when we think the price looks good. That is pretty darn objectively true, in my opinion. I think a lot of people are just here to make a buy when we think the price is pretty darn attractive. The rabbit hole part 1. In this part, he is talking about how the GameStop was dropped on the SSR list. You have misunderstood the application of SHO Rule 201. It is not a drop of 10% in the trading day that triggers the uptick rule. It is a drop of 10% from the previous day's close that triggers it. Okay, this is just a factual error, but doesn't affect your conclusions. It does become important later, though. Okay, so already we are seeing a lawyer, a German lawyer perhaps, maybe it doesn't have the same exact laws in America, but a lawyer getting a legal thing wrong. This is important, and I'm sure if we could call Josh back from the retirement puppy wife time that he is having, he might speak to this already. Rabbit hole part 2. I think the suggestion that these events were orchestrated, planned by a secret hedge fund trying to force a future MOAS is dangerous. So this is where he's talking about how there are two different large beef-having institutions, one unknown institution and one the hedgies that we have been fighting against this whole time, are trying to change the price with volume that normal retail investors do not have access to. But Ankrit Stone says there is no analysis of past options trading to suggest that the train of options was anything out of the ordinary. The way that things played out on the 24th was a gamma squeeze similar to what took place in January, only with less of a chain reaction as the stock price was held below $100 by the close of trading. It was closed at $90 and change. In the next 2 days, the shorts managed to contain the fire by finishing below $110. And that is exactly what happened. I think you are right that $50 was the critical price to trigger the squeeze that day, but $40 was also important on the 19th of February. The gamma squeeze occurred purely because of uncovered calls by the shorts. Let's not give them ammunition to say it was actually caused by manipulation by people going long. I think I just missed a super. Elias says, hey Andrew, just tuned in. Treats for Meatball. Thank you so much. Meatball needs to drink this water before he have any treats. Here you go, buddy. Slurp, slurp, slurp. Okay, let's keep going. So, in the absence of any analysis of previous trading patterns, then your suggestions are purely hypothetical. They may be right, but I think that's the only right that you highlight the distinction between evidence-supported DD and anecdotally supported hypotheses. There is conflation in Josh's DD that is sometimes just his opinion and sometimes in actual evidence, and that is an important note as well. The rabbit hole part 3, your reference for the 21 days to cover a naked short is outdated, probably written around 2007, as this is the latest day in the text, and it does not include the updates to regulation SHO introduced in 2008 and 2009. It does not even contain the mention of the uptick rule. For the current limits, which are only 13 days of FTD, please see. All right, so where was this guy when Josh was asking for proofreaders, right? Like, this guy could have easily come in, excuse me. This guy could have come in and proofread the document here so that Josh could have gotten this right the first time. The important thing about Rule 203b3 is that it only applies to threshold securities. So if GME isn't on the list, then the requirement to buy back in 13 days later doesn't apply. GME hasn't been on the threshold list since the 3rd of February and still isn't back on it now. Okay, this is really important. Part 2 of the rabbit hole, part 3. I think you missed something very important in your analysis. Remember good old regulation 201, the uptick rule? You overlooked this on the 26th of February. That day, the price tanked from the previous close of $108 to a low of $86. That means from around midday, the uptick rule was still in play and shorting on the downturn was not permitted. And yet for the last 90 minutes of the market open, they managed to aggressively push the price down from 117 to 101 close. Remember, we celebrated that 101 close. How could this happen if they couldn't short on a downturn? And an analysis of the candles at 1 minute intervals shows that there was repeated large volume sales with no uptick in that time. Either the shorts lied about the fact they were selling short, dangerous but not impossible, or these weren't short sales but actual shares being sold. But by who? So this part 3 was about naked shorting, and now it seems like that these naked shorts were not actual naked shorts. Opportunists who think that $120 was the high at which to sell, unlikely after the stock opened at $169 the previous day and had hit an earlier high that same day of $142, unlikely but not impossible. Who else owned a poop ton of shares and had a motive to sell? If that would mean bringing the price down, possibly those who got caught in the gamma squeeze earlier in the week, who had bought to hedge against the ever-increasing number of calls likely to finish ITM in the money. And remember, volumes were crazy high after hours on Wednesday and on Thursday. They bought a shisa ton of shares to cover their possible losses on calls and forced a gamma squeeze. The close at $108 meant that many calls below that amount were likely exercised already as they'd closed above strike. The price had run back down to just shy of $120, meaning the calls at $110 and $120 were in danger of finishing in the money at the close of the day. They could buy in to hedge against the need to buy to cover, but this would risk another gamma squeeze to end the week. Or they could sell the ones that they bought to hedge their positions, forcing the price lower so that they wouldn't suffer any more losses and hopefully avoiding another gamma squeeze. Remember that the uptick rule would be in place on Monday and they would have a little leverage to manipulate the price back down as they did on Thursday. Finishing with a gamma squeeze on Friday with a restriction on shorting on Monday could have ignited the rockets and started the MOAS. Okay. So this is pretty different from what Josh was describing in his rabbit hole part 3. This is part 4. Important. XRT holdings of GME did not increase. Okay, this is pretty seismic news. The value of the holdings of GME increased, but that was the case for everyone holding GME. We went from holding shares worth $40 at the end of the week to holding shares worth $101 at the end of the week. Unless we bought or sold in the meantime, then we still have the same number of shares. Exactly the same is true of XRT and the other ETFs, except that unlike us, they can't increase or decrease their holdings of GME. They have to hold the same number of shares relative to their total float. Don't get blinded by the value of GME as a percentage of the ETFs. That way madness lies. Wow. So that is a huge distinction between what Josh said about XRT. Okay, this is starting to build up. Evidence to support March 19th, 2021. This is seven or eight different pieces of evidence that Josh specifically noted about the March 19th date. If you guys have not smashed that like button yet for these groundbreaking, shell-shocking revelations, then you have to, because Meatball is done with his water, which means he's going to get a treat very soon. He's not done with his water. I just spilled some. AI prediction starts around that date. First off, you can't say something will happen on a given date because something else says it will happen around that date. Again, Josh himself admitted that AI as the first point was not because it was the strongest point, and I am still very skeptical of a computer model. If it were that reliable, then the person who built it would be a multi-billionaire because they would have the only known working crystal ball in the world. Please, let's not overstate the accuracy of this model. Remember, garbage in equals garbage out. And if the cogs in the machine aren't aligned right, even with pure raw materials going in, you're gonna get a gnarled mess on the other end. This is true. There are so many reasons why this model does not work. I personally have not seen an apocryphal model, and so I don't want to be disparaging towards it other than to sound a note of caution. You don't give any links to the model for anyone to check for themselves, just the raw data, which is useless on its own. Thank you for the super. Give Meatball a scratch behind the ear and tell him it's from Get Smart Media Worldwide. Get Smart Media Worldwide gave you this scratch. Yes, they did. Yes, they did. They just gave you a scratch. We're talking about how Josh's endgame DD is not 100% accurate, and we've already seen some important claims that Josh's research is not correct. I personally have not seen, okay, that's what, blah, blah, blah. Has the model proven its ability to predict the future? For example, if you put in the data until the end of December, does it predict the gamma squeeze that happened at the end of January? Did it predict this week's gamma squeeze based on the data up to the end of January? When was the model last updated? To me, the model is not evidence of anything, just confirmation bias. This I completely agree with. Doesn't mean that Josh is wrong about it, just because this is one out of his 8 different points. Let's not try to spam the chat. Gonna have to put you in timeout. Okay, remember the naked short activity on February 24th and 25th? You are measuring daily short volume and assuming that equates to short interest. Read the disclaimer that comes with the data that you are quoting. These are not necessarily short sales, although they might be. Don't pin your hopes on daily short volume being an indicator of eventual short interest. They've already debunked the 21 days for failure to deliver. 18th is XRT rebalance day. They think that Josh is flawed in the assessment that XRT will pay a dividend by the 19th of March. This is something that I have, that I read DD about almost 2 weeks ago now, and something that I pressed Josh hard about during the interview. Look at the table you posted, look at all of it. Ex-dividend dates are published months in advance. They haven't been published for this year yet. Why do you think that a process that would normally allow for about a month between the declaration date and the ex-dividend date for most stocks, and in the case of XRT specifically has always been 2 months in advance for March, be rushed through in less than 3 weeks this time around? This is important if true, big if true. The ex-dividend dates in 2020 were all on a Monday, not a Friday. Then again, the dates for 2019 were all Fridays. History doesn't show us to predict when it will be with any degree of certainty. In my honest opinion, you have about a 20% chance of being right. You also have no source for the claim on the ex-dividend date, and so this is pure speculation at this point. Also, the importance of the ex-dividend date is overstated. I wish Josh was here to defend himself, because honestly, this is pretty huge. This is unfortunately one of the most important parts of his analysis of pieces of evidence that points to March 19th. Yes, short sellers pay in lieu the price of the dividend. Yes, there is tax liability for dividends paid in lieu by short sellers, but the short seller is in no way responsible for the tax liability. It is all on the shareholder. In fact, if the short seller has held the short position unhedged for 45 days, then they actually get a tax break for paying the dividend in lieu. This is getting a little bit technical, but the main point is that when I pushed Josh on the question of do the dividends have to be posted on this day, he said the tax incentives speak for themselves. Unfortunately, it seems like the tax incentives might also be reversed. You make the mistake of referring to another Reddit DD post without verifying what they are saying is true. This is why Wikipedia isn't a trusted source of information, because anyone can write whatever they want. Also, the most recent dividend was 25C. How likely are the shorts to worry about 25C on an $80 share that they have shorted when they stand to collapse if GME takes off? They are losing more than that by the price spikes in GME pushing the price of the underlying up disproportionately. And don't forget, you say that they covered all the rest of the underlying straight away, so they aren't even profiting from those other shares in the underlying falling in value. I think some things need to be kept in perspective here. The relative importance of the dividend payments, in their honest opinion, isn't a big factor. You talk about ETF rebalancing and don't explain it or how it will affect GME. What is rebalancing? It is the process by which ETF adjust the amount of shares of each underlying it holds relative to each other so that they have to correct weighted value. What does this mean? Well, as you pointed out, GME is about 10% of the value of the underlying XRT. That means movement in the price of GME has far more of an effect on the share price of XRT than the other underlying stocks. This is bad for the ETF because they want to be the stable ship in rough waters. The shorts are shorting ETFs because this depresses the stock price of the ETF and makes the AP redeem shares for the underlying to keep the share price in balance with the NAV. They are pumping in money to depress the share price of XRT so that GME will be pushed out the other end, which will in turn depress the value of GME because it is listed for sale in large volumes. What happens at rebalancing? Well, If GME is 10% of the value of the underlying and ETF wants it to be only 1%, they are going to reduce their holdings of GME by somewhere in the region of 90%. This is bad because it means that at that point, the shorts won't have to pump the money in to short the ETF to get GME onto the market. The ETF will just give it up. And I even asked Josh specifically, do the institutions running the ETF have an incentive to screw over the hedge funds that are waiting for the price to drop? And he did say something similar to the effect of these institutions do not have to support each other. I am going to clip all of his answers, especially to some of the questions here later, so that you guys can see his answers for yourself. More GME will be released onto the market than was pumped out on the 28th and 29th of January without the shorts having to spend a single penny shorting that day. March 19th could actually be turned into the day of the mother of all short attacks, MOASA, except it won't be a short attack, but a reaction to the gamma squeeze. When is this going to happen? Yep, March 19th. Am I guessing? No, he does his own research. Rebalancing occurs on the third Friday of the quarter ending month, or March 19th if the quarter ends in March. Okay, so technically he is guessing that the quarter ends in March for XRT, but at least he is giving the information for those more capable than him to find the missing piece to finish this part of the puzzle. Okay, so the research is not finished. However, it seems like March 19th now, I'm getting a little like hot and heavy. It seems like now the March 19th could be potentially a day of a short attack instead of a short squeeze. So technically, they are guessing the quarter ends in March, but at least they're giving more information. Could there be a silver lining to rebalancing? They think so. If the number of GME shares held by the ETFs is reduced to 90% relative to the number of shares of the ETF itself, then this means the same amount of shorting of the ETFs after the rebalancing will have 10% of its current effect. The shorts won't be able to manipulate the price of GME via the ETF so easily from March 19th onward. Rebalancing places no onus on a short seller to do anything. It is purely internal process for the ETF. Based on $100 per share of GME, it will be about 10 times harder to manipulate GME through XRT. As an aside, this document, which details how the ETF will be run and managed, makes no reference to when dividends will be paid. In their honest opinion, past patterns are not necessarily indicative of future behaviors, particularly in the age of COVID. At this point, it's important to note that I still have faith in Josh. However, I'm having trouble believing in the March 19th date. Of course, whether or not this changes your mind, you do have to understand that this is not financial advice. This is just some other person's research that counters another well-read person's research, and you do have to do your own research, just like maybe another counter DD that might come out in support of March 19th. Massive chain options. What you have here is an observation, not analysis. So GME has ridiculous chain options that day, in particular compared to dates before and after, but so do all stocks. Why is GME the important one out of the shares on the market? The data you've quoted to is comparing apples to oranges, only the calls in GME and only the puts in the others. What about puts in GME and calls in the others? This is something that Josh even mentioned during the live stream as he would change his DD about this. If you compare GME volume of calls with the volume of calls in the other stocks, is there any discernible difference likewise with the puts? The post you refer to is written by someone they can't make up their mind on. He thinks he is either extremely talented, the mother of all fudders, or he is a simple smooth brain with amazing mining skills. He started the whole $40 close argument on the 12th of February. Almost all of this sub came out shouting him down because he made such fundamental mistakes in that post. And if you look at his post commenting on the 25th of February activity, he says, if we shorted 33 million shares, and let's be very generous and say that they shorted every share at $100, that would be 3 billion with a B in stock shorted today. They shorted GameStop's entire market cap worth of shares in one day. Again, let's be generous and say that they cost them 6% on average for them. The day started at 1% and ended at 12%. So we will give them all the middle finger. 3 billion times 6% is $200 million in borrow cost today alone. $200 million to drive the price down for a single day. It's that important. Makes for great reading, except the percentages that he's talking about are the interest rates, APR, and he talks about them as if they're a fixed fee. Don't believe me? Then follow his Fintel link to see for yourself. This guy is able to mine and interpret huge amounts of complicated options data and then interpret them in order to be able to draw conclusions that nobody else can see, and yet doesn't know how a credit card works. Do you really expect me he can't tell the difference between an interest rate and a borrowing fee? Really? I think if you're going to trust someone else's DD, you really need to be sure of that person. Okay. This is not as big of a blow. It's not like the mother of all short squeezes on March 19th could actually become a mother of all short attacks, like in point 3. But let's also cover the quadruple witching day. Combine these observations about options chains with your 5th point about March 19th being a quadruple witching day, and you might actually have your answer. The market is expecting a lot of volatility on this day, so is it any sign that anyone is hedging against that volatility? You're drawing a conclusion based on a single observation that has another obvious explanation. Collinearity. This is important. This is something that in my head I was thinking about. It is a little bit too much of a coincidence that this is about it. This is going to happen on the same point as number 3 and 2. It seems like quadruple witching day could be an explanation for all of the contracts and expiration. What historically happens on quadruple witching days? They happen 4 times a year, most recently in December 2020, so there should be plenty of data out there to look at and establish if March 19th, 2021 is any different or just repeating the same pattern that occurs every 3 months of every year. Okay. GameStop Q4 earnings are released 4 days after March 19th. How on earth is this going to affect the short sellers? Do you expect a massive swell of confidence before the earnings report is announced as opposed to after it? You might as well include the fact that Ryan Cohen has the staff of GameStop looking for the cure for cancer and expects to find them on the March 23rd. That is mean, but it is a fair point. Okay, they're being obtuse. I hope they get the point that the earnings report will affect things after it's published, not before. 7. Now that the price is rising every Friday, millions of worth of stock on contract is going in the money. Sorry, no. Only if the price continues rising will millions worth of stock finish in the money. They've probably already dealt with the majority of calls up to $100 who wouldn't have exercised their contracts this week when the price went over. So only those over $100 pose a danger now. If they can keep the stock under 110, then these contracts aren't a danger anymore. The only person Diamond hauled enough to not have it exercise the call contract that I know of is DFE himself, who is sitting on $12 calls expiring on the 16th of April. Who knows, maybe he's waiting for the perfect time to pull the trigger on them to send his 100,000 shares held long into orbit. If he's still holding, then it's because he thinks the stock still has a ways to go up. Their thoughts? With the rebalancing taking place on the quadruple witching day, it's likely to be a very volatile day with huge amounts of GME dumped on the market, so don't be surprised if we close that day down on the previous day. The really important part of the picture that is missing for me is who sold the calls that are now finishing in the money. The shorts have known for months that the MOAS is coming, and they are caught in the middle of it. They need a way out, and desperately. Are we really to believe that their entire plan is to continue shorting until GameStop goes bankrupt? Well, that's not likely to happen, so I doubt that it is their plan. It does seem like it is too simple. The other escape route, get GME back down to a value where they cover their shorts and buy back gradually. Still unlikely with the estimated number of shares floating around, and the diamond hands that hold the shares. They're spitballing, but what if the shorts are the ones who bought all the calls and then forced the gamma squeeze this week? They make money from the calls being exercised and have a shice ton more stock to sell on the market to depress the share price. Shorting an ETF means that the price of GME gets artificially depressed. The AP has to acquire new shares of GME to bring the AUM back up in line with the share price of the ETF compared to the NAV. That's something I've talked about before. It's like borrowing a sell from the future. The shorts now have passed the bag for their positions in GME to the AP, who had created naked longs to reconstitute the ETF holdings. By hiding in the calls, they could be passing the buck for their naked short positions to others. Citadel buys calls from another clearinghouse who gets caught in a gamma squeeze and now has to find shares at any price. Now that the other clearinghouses has a vested interest in seeing the price of GME collapse, share your pain with your enemies, and all of a sudden they have the same interest as you and you have an enemy in common. Hold on. Don't spam. A far more pressing danger that needs to be dealt with so that you both get out alive, because if they go down, then you have no choice but to go down with them. They know that the general rule is that as soon as you mention the Nazis, you lose the argument, but the whole world united against the Nazi party and their Axis pals. What happens immediately after they were vanquished? The Allied forces went back to their old factions and had 40 years of a Cold War. If the shorts managed to get every other market maker on the hook, if GME spiked, then you bet your tookuses they will get grouped together to cover themselves, regardless of how much they despise each other. Here endeth my ramblings. Please accept these comments in the spirit as they are intended. They are sitting in the same rocket as you, waiting for liftoff. Their wife and kids are next to me. Okay, I'm gonna say it in his voice. My wife and kids are next to me, and our savings are right under the burners and stand to get eviscerated if this thing starts up but doesn't take off. I have friends and family sat all around me, holding onto my diamond hands while we wearing blindfolds, trusting in my research and DD. We are all in this together, and I want you to be as right as much as you do, but wanting ain't worth jack. We are comrades in this war of attrition, and we assume that if you are holding GME, not only do you have diamond hands and balls of steel, but also skin thick enough to have someone else disagree with your opinion without taking it as a personal affront. I would like nothing more for someone to prove me wrong, because I don't have any answers, just observations, and even if I am not proven wrong, that doesn't mean that the MOAS isn't still brewing on the horizon, with more and more fuel being pumped into the tanks ready for liftoff. Peace. If that was as much of a shell shock as it was to me, for you, I think I want to hear your opinion in the comment section down below. Is March 19th still a possibility, or is it just a trap for us to fall into? Here is my 2 cents. I am just a smooth-brained ape, just like you guys. I want a banana. I'm diamond handing. But the most important part is that you do not get your expectations up and think that March 19th is the end-all and be-all. Dates are just dates, right? And just like this research said, and even like how Josh said, this might not happen on March 19th. There could be a huge backslide. There could be a short attack instead. And the most important part is if enough people are complacent and happy and think that March 19th is the day, and then it isn't, we could see a humongous amount of paper handing from retail investors who were promised the moon and did not get it. I'm losing my voice because of how emotional this gets me. I want you all to know that we are here together. Meatball is here. I am here. All of the Meatball Army is here. If you guys enjoyed this content, please continue supporting the channel by coming to the live streams, hitting that bell button so you know when the live streams are. And until next time, I'm excited to learn more with you. Peace.